Gareth, always great to have you with us. So I want to start with what's happening in the cryptocurrency space. Now, you actually made the call that Bitcoin would trace back to 30,000. I want to get this right, on May 14th. That was when it was trading close to 50,000. We're seeing cryptocurrency again taking a hit today. Curious to know what you think happens from here. Do cryptos bounce back? Does Bitcoin bounce back to that level of 65,000 or 70,000? If not, where do you see it going from here?
Hey, and thank you for having me on. So yeah, we talked about this, or I talked about this last week when I saw this nasty head and shoulder pattern forming. And the head and shoulder pattern, once it triggered about 5 days ago, was a quick shot down to the downside to 30,000. And it's actually a measured move using a calculation of the high of the head of the shoulder to the neckline, and then you map that out down. That was the key there. Now, going into the future, what you're going to look for is a bounce here in Bitcoin, maybe as high as about 48,000 to 50,000. And then I actually have a projected next target, possibly as low as 20,000. Now, let me just caveat that with the fact that long-term, I love cryptocurrency. I think it's a long-term hold. But again, you have to flush out the weak hands. Just like Jared was saying, you have too much money in there for the wrong reasons, for greed purposes and emotion versus good investment for the future. So again, a short-term bounce, absolutely, and then another leg lower to flush out everyone else.
So is that is what we're seeing, this sort of phenomenon going on with, these huge volatile swings? Is it because of FOMO, right? People continue to have fear of missing out. They're going out and buying a meme joke, cryptocurrency called Dogecoin, sending it up into the stratosphere. Do you mean we have to shake those people out? And if so, what's it going to take to get them out of that space?
Yeah, and you're 100% right by that. So, I mean, if you go back to the late 90s and the dot-coms, you had this same euphoria, this same greed and emotion, kind of people chasing companies that really had no value. They might have been run out of their parents' basement and they were given crazy valuations. And the same thing could be said in terms of Dogecoin, which, all the respect to it, I never thought it would go as high as it has. But again, you have to wonder about the long-standing nature of some of these cryptos. So I do think you need to flush people out. You need to get to the point where people are so fearful of Bitcoin and cryptocurrencies going under. That'll put in the bottom. I still think institutions will accumulate, but you got to get down to that 2017 high, which was right underneath 20,000. Once you're there, you should be able to really accumulate some serious good positioning for the long side on crypto for the next big move up.
So to that point then, Gareth, because I feel like Alexis and we've been talking a lot about cryptocurrency, particularly lately. And we have heard this line from some of these more conventional investors, where they don't necessarily know too much about cryptocurrency. They don't know how they feel about it. They're not necessarily advising their clients to buy, to get involved. Do you think that is far too myopic a view for investors to be taking? And how much of cryptocurrency really should they be thinking to add to their portfolios if this is a space that they do want to get involved in, despite the volatility and the fear that might come along with some of these wild swings?
Yeah, and I do think if you take a longer term view, you need to have exposure. I mean, people could have said the same thing about, dot-coms back in the late 90s, and then you had stocks like Amazon survive and become some of the best investments anyone could have ever made. So I would strongly encourage people to stick with the best of breed, the Bitcoins, the Ethers, those type of ones. I think those are the ones the institutions will buy when the time is right. And I also think that you have to look at it in terms of having it the right percentage of your portfolio. What I recommend is 5% of your portfolio in cryptocurrency, 5% in gold and silver and metals. And then, again, if it dips, you can always add and rebalance. And then same thing on the way up. That's what I did. As it was rising, I would unload a little bit more. And then as it's dropping again, once it gets into the 20,000 range, I'll start accumulating again.
But so how are you allocating that 5% within the portfolio to the crypto space? Is it all in Bitcoin? What other cryptocurrencies are you looking at? Which are you just staying away from? And I'm curious, what you're thinking about when it comes to the ETFs. I mean, we haven't yet gotten a crypto ETF here in the U.S. And when we do, are you going to be a buyer?
Yeah, so I may be a buyer of the ETF. Based on the fact that I have a crypto account, it's very easy for me to buy and sell Bitcoin. Although I have to say the fees are ridiculous right now, so I think those fees have to come down significantly, and they will. It's one of the reasons why it's hard to be long a Coinbase for me, considering that pressure on the margins will be significant over the next 5 years. But for me, in terms of allocation, definitely the biggest allocation is Bitcoin. Then Ether is second, and then I kind of have this second tier where I have a little bit in Litecoin, a little bit in some of the other ones, but mainly, again, focus on those best of breed because, honestly, I don't think every crypto currency will survive. And you want to stick with the ones that are the most popular, the ones that have the staying power, the ones that mainly institutions are involved in, like Ether and Bitcoin. So you have that security. Again, it's nothing against taking a shot just like a small cap stock on a small one, but just make sure you're not putting a ton in it, in my opinion. Be safe.
To your point on those fees, which can be pretty outrageous and add up if you're going to do a lot of trading in and out of these cryptos, I know Robinhood has a way where you can avoid those fees. You don't actually own the cryptocurrency itself. Can you explain that a little bit to folks who may be confused? And is that perhaps a good way to go to avoid those fees?
That's so first of all, I always want to be honest. I don't know a ton about that. I would always look into it and just say, all right, listen, let me make sure I know what I'm buying when I'm putting money on the line here. For instance, it's like buying an ETN where they don't actually hold the Bitcoin like GBTC. That's a little bit on the concerning side to me because I want to know, just like when I buy gold, I want to know that I actually own that gold versus just, a piece of paper that says I own that gold that could be taken away from me or somehow get lost, right? So again, I don't want to speak to something I'm not fully aware of, but do your due diligence if you're going to go that route. There's usually a reason why you're avoiding those fees. Just double check on that.
So, Gareth, I want to just quickly double back to something that you were talking about, which is those best in breed cryptocurrencies. I know you're mentioning Bitcoin, Ether, Litecoin. I do, however, want to ask you about Dogecoin, just because it is so incredibly popular. And we have seen Dogecoin absolutely soar. Elon Musk has been a fan, says that he is not unloading any of his Dogecoin. What do you make of Dogecoin? Is that something that you think is completely a joke? Are you completely avoiding Dogecoin? Or do you think it's gotten to the point, because it is so popular and because we've seen investors like Elon Musk get involved in this space, that it is now a cryptocurrency that we do actually need to take seriously?
So I think anytime something has a market cap the size of Dogecoin, you have to take it somewhat seriously. It's like dismissing a 50 or $100 billion company. You have to definitely take it on the serious side. The only thing I would say is investors should ask why they're owning a cryptocurrency. I own cryptocurrencies because I'm scared that the printing of dollars and the Federal Reserve are going to dilute our currency base. And ultimately, it's a way for me to diversify away from dollars and kind of offset inflation and also the printing of money. With Dogecoin, from what I know about it, there's another 10,000 Dogecoins printed every single minute. So I'm not sure if it's much different than the US dollar and what the Federal Reserve is doing. Now, going to Elon Musk, he did say he was getting involved a little bit in terms of maybe making it a little bit more stable. If they could do something where they kind of change how it's printed, then that would be a little bit more interesting to me. But again, each individual investor definitely make a thesis for why you're investing. What's your purpose here? Is it just to get rich and have $1 million, or is it because you're diversifying away? Just like when you buy a company, what's your thesis for buying that stock? Is it good earnings? Is it a dividend? Is it the chart setup? Have those same thought processes for a digital currency like Doge.